Hello, 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 hello. Yes, so you're officially welcome. Today I'm just going to take you through a few strategies that I have studied so far. I've been trading with inner cycle trader ICT style of trading, So today I want to share with you a few nuggets, that I've picked up from my mentor, Michael. Okay. So um, this is just a small tutorial. It's gonna be a quick one, then we are out of here. You know, yeah. So I'm just gonna take one pair, any pair, at all from the volatility pairs, and then analyze, and then we take it from here. Okay. All right. So it's just gonna be a quick video. So now, what is inner cycle trader? What is he preaching? What is the gospel that he's preaching? He's saying that we look at the market from different perspectives, so today I'm going to look at it from one of the perspective of other blocks. Okay. We're going to consider other blocks, trading, how to trade other blocks on volatility pairs. Okay. So now let me tune this chart down to the weekly time frame. Let me go even to the higher time frame, the monthly. Okay, the monthly time frame. It will take a while to load because it's been a while that I opened the time frame. Okay, all right. So here we are. This is a monthly time frame on a volatility 100. Okay, this is volatility 100. All right. So this is on a monthly time frame. So now, when you pick a chart like this, so this is what I'm going to do. I'm going to mark some areas that we have to take critical notice of. Okay, great. So where am I going to mark? Now, I'm going to show you that there are a few things that you see on the market that sometimes stands out, or should I say are very unique. Okay, yep. So when you see them, you know how to handle them. Okay, from the top I have this. I'll give you further explanations. Okay, so just relax. Let me just demarcate the areas of importance. Boom. Okay. Alright, so let me be quick with this video so that we don't have to waste much time here. The green line is not so visible, so let me choose a color that is more visible. Okay. And then boom. Okay, so we have this as well. Okay. Push. Okay, so yeah, go. Right. All right. So basically, this is it. All right. Let me just continue demarcating some more always. Okay. All right. So a quick one. here, and then sorry, let me give you some major areas of importance. I mean, the market is so much interesting if you have deeper insight, you know. Yeah. So now let's break it down to the weekly time frame, and then we'll look at it from this point. So we have this week candle still not yet closed. I mean, we are today is Thursday. All right. Okay. So what can we see from this chart? Okay, I'm just demarcating only order blocks. Okay, I'm just demarcating other blocks. Besides that, I'm not demarcating any other. I'm just demarcating other blocks. Okay, OBs, what we call OBs. Okay. Right. Okay, so I'm just demarcating OBs. This is a weekly OB. Right. I'll explain. Let me even push it to where it's supposed to be so you understand it much better. Sometimes when you drag the lines to a particular place where you want them to be, it becomes a bit difficult and challenging to drag them there, you know. Alright. And then we have something small here. Right, now let's go down to our daily time frame. I'll explain every single thing that I've done here to you. Okay, so just be patient with me, and then I'll take you through. Right. So now we come down to the daily time frame, and this is what we have here. Okay, so let me try and find some OBs. And right, we have nice other block here. Right, and then shoots up into the sky, and we are seeing some sort of resistance here. Let me check something here. Yeah, okay, so they traded into the main threshold. Right, okay, so guys, this is it. The other blocks that we use basically in trading on the volatility pairs is when we consider the higher time frame other blocks. They work like magic, you know. For instance, this is volatility 100. You can take as much as $100 within a space of 2 minutes, or within a space of 2 minutes is too small. Come on, within a space of, let's say, 1 hour, depending on your lot size. Even the least lot size that you could ever open is 0.02, 0.20 on the volatility 100, and it can make you more money in a short space of time. All right. And how does this work? How does other blocks work? We know what other blocks are. For instance, if this is a particular trade setup, the candles are moving downwards, or the price is surging down. Price is surging down from somewhere up here, came down to this point, goes up, comes down again, and then picks up some bullish candles, and then comes back down, up, and then look at this move. There is a very sharp move here. You see, when price got to this point, there were some bit of consolidation here. Good. They were consolidating here, whether to the price was delineating whether to move up or down. Now all of a sudden there was a very sharp move downwards, and look here, look at this magic, look at this magic, look at this magic, look at this magic. Consider all the candles that has moved down, price movement downwards. Which one moved very sharper and faster? It was this particular candle, this particular bearish candle. It moved very fast down here, and the body went deeper below all the candles that are here. Price closed below the body, although the price didn't close below the lowest price, which was at this point though, but the body of the candle closed. The closing for this particular candle is the lowest so far for all the price actions around this zone. And when the body closed around this zone, what happened? The next day candle pushed up. The following day the candle prices, the market tried pushing down, but it couldn't. Still it will continue pushing up. It closed as a doji candle. I mean, I'm not much into the candles anyway. And then the following day, what happened? Price actually closed above that bearish candle, and it began to push the price higher and higher and higher. And when it pushed it higher, what we actually explain here is this, that my mentor tells me that there is what we call liquidity. Okay, there is more price action happened around this zone. Okay, yes, there's this zone, more price actions happen. Price try to push down into it, can push down into it, pull down into it. There's more price action happening now. Where you take note of this, wherever you see a lot of candles, usually there's more price action happening there, and price would always want to go back to that area where more price actions are happening. Okay, so look at this wick. You see this wick. When those times when we saw the retail mindset is that when we see a lot of wicks, price is running away from the wicks, so we trade up the opposite direction of the wicks. But hey, bear in mind, where wicks are, it means that there's some price actions there. Okay, all right. So it pushed down, pushed up. Now, when price moves in this direction, comes down from a certain higher price point and comes down and consolidates, and then there's one price that takes down all the liquidity and begins to run on the highs of where the price came from. Expect a retracement back into the origin. And where is the origin? The origin now becomes the order block. So now, before this rally up, before the price rallied up here, where was the bearish candle that formed first before the price? So usually what happens is that as you see this bearish candle, it doesn't mean that the market is selling, or maybe the players in the market are trying to run down. No, these are all orders that they are just placing, ready to buy. That's what they call hedging. I mean, they hedge their funds here. So now as they are here, they are buying already. As you see the candles moving down, they are buying already. Then that's why price all of a sudden, boom, then it moves and rush up. So when they hedge their funds here and boom, it rushes up, it comes back to wherever they were hedging their funds. Okay, and now they come to accumulate all the orders here. So when they hedge their funds here to buy, and then they begin to close their orders somewhere here, then price begin to retrace back into where they place those old actions. So I told you earlier on that wherever you see wicks, that means there was some price action happening there. So now they begin to also go back to go and see where the price action happened earlier on, to see if there's anything left there. Now they come back, and that is where we come the idea of order blocks come in. Okay, so now this bearish candle here becomes the order block. So it means that expect usually price to trade back into a normal price action where, for instance, this candle has traded back. This is the order block. Price should trade back into this particular block and then begin to take the orders here and then run away with it. Okay, so this is it. This particular candle is the order block here. And now let's go back. Let's look at this. Why did price go up, come back to this point, and then it didn't hit just the edge and then run away? People don't understand what it means to trade order blocks. Usually order blocks are not just traded like that. It comes in conjunction with other factors. So for instance, this order block, the reason why I drew this line here is that we have something we call the mean threshold. The mean threshold is somewhere in between the median. I mean, those who study statistics, we have what we call median. Median is somewhere in the middle. Okay, so every time people want to break even, so they want to go to a point where they are not losing, they are not gaining. Okay, so that's the mean threshold, the median, this point, the middle point, the midpoint of this bearish candle becomes the mean threshold. So you realize that price trades back into the mean threshold, and then before it rallies up. There are days it may not trade into the mean threshold, it just trades on top of the bearish candle, and then it continue moving up. But there is a factor, there's a reason why price traded deep down into the mean threshold before it went up, and that's another thing that maybe I'll try to explain later in another video, which was the fair value, what's the name, the price imbalance, sorry, the gap. Okay, we have what we call the FVG, the fair value gaps. Okay, so this side, this particular side, from here all the way up, it hasn't been traded into, so price needed to trade down into it. Okay, price actually trades up and down. Price doesn't trade one side, it's only buying. So if they are buying, who sold to them? Okay, so it means that someone bought here, but there should be sellers. Okay, that's how the market moves. Okay, so when it trades back into this, so we are now on other blocks, we'll look at that another video. So we are now in the other blocks. When price trades deep down into the mid portion of the other block, then it begins to rally. So this is an entry, right as an entry. Okay, now even with this, let me put another icon here so that we can even look detail into this and look at how you can even beat down your chart to a smaller time frame to be able to ascertain where to enter. Okay, all right, so look at when we get to the smaller time frame, I'm sure we'll see this zone. So price traded into it, and then boom, what happened? It began to trade up, and usually people just enter trade and say, oh, I'll exit at this point, I'll exit at that point. You know, my mentor has a lot of ways of exiting a trade. You know, we consider highs and lows. We'll talk about that in another video. But I have what we call the fib levels here. So for instance, if I had used my Fibonacci levels, which I know is a common feature on the MT4 platform, mine looks a bit complex. Ignore that. This is as a lesson that I learned from my mentor. Okay, so for instance, if I was going to look at a long-term trade, I was going to exit somewhere here. Okay, that's symmetrical level. Boom. Okay, so let's cite a perfect example. If we had entered a trade here, buy limit here. Okay, assuming we had entered a buy limit somewhere here, and then let's look at how much money would have made if we had entered a trade here. Okay, where should we place our take profit level? Okay, all right, so would have made a cool $1,105. Come on, the least loss size that you could ever use, and you are making $1,105. Come on, man, that's money. That's money, man. All right. Okay, so that's it. Okay, so let's move on. So that is basically it, right? That's basically the order block. So it moves into whereby you want to exit your trade. I mean, you could have exited somewhere here, right on top of the body of this candle. I mean, or on top when it has taken the highs from this point, then we move. All right. Okay. Another important thing that you can even see from this chart is that when price was moving down, there was a break in market structure, which I don't have to explain in this video. I'll explain in another video. Break in market structure. This was the previous high came down from the low here. The previous high was raided, it was traded through. Okay, this high was traded through. So it means that as the market is forming highs and lows, now the old high that was formed here has been broken, it has been traded through. So the market is no longer, you may call it trending down, that is moving upwards. Then it retraces back into another block, and boom, here we go. All right, so now let's go to a smaller time frame, on the weekly time frame, and see what we have there on the weekly time frame. So this was what I indicated on the weekly what's the name, time frame. So for instance, this was where the OB order block was. You know, even if you want to refine it more further, okay, if you want to refine the order block more further, look at on the weekly time frame. Could you see this? Could you see this? You see, so this was an order block, and there was a gap here in a way nicely, but price traded deep down and hit just on top of this bearish candle. This was it, just by some pip, just a small pip. Okay, and then boom, it continued going up. It never came back down to that point again. All right, so when you refine it to a smaller time frame, you even get a more perfect entry. All right, I think my video is becoming too long. Let me be quick with it. And then, so for instance, if it was on a weekly, this is where we would have entered. Now weekly, so you refine it more further when you are lowering the time frame. So we refine it more further. We enter our trade here. Okay, and then boom, here we go. Then it goes and it goes and it goes. So for instance, if we had entered a trade here, come all the way up here. Now let me show you another thing here. Look at this bearish candle here. All right, it would have been a very nice order block. Look at it. So when this price came back down, hit this particular bearish, this is the bigger bearish candle. You know, usually the last bigger bearish candle move, okay, before the rally up. Not always the case, but look at it well. When there are no gaps, when there are no FVGs, when there are no price has just traded down and it's traded up equally. Okay, so there are not FVGs laying down around the smaller candles. Ignore the smaller candles. Now consider the bigger one. The bigger one becomes the order block. All right. So it trades now. You could have entered here, and then boom, another free money, and all the way up, and then it gets to this point. It consolidates here, and then trade back into it, boom, all the way up again. So that's basically order blocks. So what I have marked here are all order blocks. Okay, so this bearish candle that moved down before this rally up is an order block. That is why you notice that price traded into this candles, and still, okay, let me just quickly draw it for you to see. Price traded into this candles. If you notice, it is on the mean threshold. Some even came down all the way into the mean threshold of the candle. Okay, right into the mean threshold of this particular candle, and boom, it went up. All right, so always take note of the mean threshold as well. When price breaks the mean threshold, it doesn't make the order block valid anymore. All right, if the block hasn't been traded into the mean threshold, still consider it valid. There are days that price will penetrate deeper into the mean threshold, go down very deeper, but still the block remains valid. That is when you can see. This is where you only see when the block is valid. When price doesn't close inside it always closes and leaves the wick inside the mean or even below the mean threshold. All right, so that is one of the things you should also take note of. All right, I think that's basically it with the order blocks. I would like to end the video here, and then or let me go down to a smaller time frame, daily time frame, and then see what we have here. You know, there was an order block, a nice order block. Price didn't even bother trading. It traded just a little bit into it, and then boom, it went back up again. All right, so here, look at what's happening here. I have a very old high point here that I'm expecting price to come back, hit it, and then reverse down and come and take. There are a lot of price imbalances here. There's only buying, but there hasn't been any selling at a particular zone. You know, so I'm expecting price to come back to clear all those areas. You know, so all these areas are potential price points where price must come back and discipline it. You know, but we are looking for something up here. So this is currently price is accumulating. It's accumulating more orders. Okay, it would manipulate it before it will redistribute it to the appropriate side. Okay, so the manipulation may come in when it push prices up here somewhere, hit something here, and then the proper redistribution comes in where it can come and take this price imbalance. We'll explain further with the price imbalance and then other stuff in my next video. All right, okay, so have a nice day. Today my video is 24 minutes. Take care, and then I will see you in my next video.